Hello and good afternoon, Zinger Nation. Jonathan Mallard here, and we have another show, Making Money with Benzinga Pro. We're going to talk a little bit today about the hidden traps of trading, some things that you might not know are just waiting out there to catch you off guard. And Andy from Mighty Soldier Trades is going to guide us through a little bit of that info. All right, we'll be right back. Andy, good to see you, man. Thanks for coming back on the show.
Hey, Jonathan, what's going on? Thanks for having us back. It's really exciting to be here. And first, if you don't mind, I'd really like to say that I think it's awesome that you guys bring on people from the community. I've heard other companies basically kind of, it seems like they're biased towards bringing on these people that are, seasoned traders only. And I think that the new traders have a lot to say too. And I just think that Benzinga is right on the money with bringing people on that are not just because they've made it to that place, that we all look up to, but because they have something to share from their journey right where they're at.
Absolutely, man. I mean, trading, if trading's not a journey, I don't know what is, with all the ups and downs. And that's definitely a part of what you bring to the table is knowing what to look out for, because those downs will come at you. And how can you mitigate against those risks that you're gonna face, whether you're trading with $100, $1,000, $100,000, and it just goes up from there. So, just on the topic of the hidden traps of trading, you and I were talking earlier this week or even last week about things like market orders versus limit orders. I think I was actually sharing a trade with you where I would have been profitable, but then I put in a market order and I ended up losing like a little bit instead of making a decent amount. So do we just want to start there? Maybe for our beginners, talking about the importance of market orders versus limit orders?
Well, Jonathan, I had a CVM trade, I believe it was, about 4 years ago, I think. I'm not sure about the timeline here. I'm just guessing. But anyways, CVM, I bought it with a market order because I was taught by my guru that market orders were what you wanted to do. And I thought it's the easiest thing. I don't know what all these other orders are. I had no idea what these orders are. I had started a long time earlier, paper trading Forex. And I can tell you that even though I learned some things, I still was not educated, didn't know the whole story. So all these other orders were just intimidating and I didn't know what to think of them. So market order was easy. I put in my order in this thing and I got filled. I don't know. I'm just off the top of my head. Like, let's say it was like 50, 68 cents above the fill price and instantaneously seemed to like one tick to me,
right
down. And then right when we're there, rejects off my number, just like every other time that I've ever lost in a trade. And then it starts going down more. And, I'm so ticked off because I just basically got filled way up here where the stock wasn't even at. And it wasn't even there for more than a blink of an eye. That I'm like, how did this even happen? Did you see this? I'm asking Sarah. I'm like, did you see this? What? Look at this. And it really knocks you off your game when something goes wrong.
Yeah, absolutely. And so what basically there are all these different types of orders, right? And so a limit order is where you just tell the brokerage, I only want to buy or sell these shares or these options above or below a certain price, not just wherever the market is going, but no, only up to this level is where I want to buy or sell those shares, correct?
Where you're going to get filled in any other place, it will not fill you. And then there, let's say you're looking at your level 2, you can see that liquidity is there for you. So if I want to take the ask at $3 and there's 10,000 shares and I'm only looking to get 100 of that, I should be able to take that ask and get filled immediately, no problem. But limit order, or I can place it down at the bid, let's say $2.99, and it has to come down back to $2.99 and in order for me to get filled at that point. So I'm either giving liquidity or I'm taking liquidity. But yes, limit order is I'm putting the price out there. I'm saying that there's no other price that I'm willing to take for this. And that's the scary part, because a lot of people, they think stop limit order is better because it's a limit order, but there's a big chance that it can gap right through where you were, and your stop order doesn't even get filled. So on a stop, I don't even mess with the stop limit order. Stop market order is the only thing that I'm interested in for that.
Because when it comes to a stop, it's like no, I'm out. No matter how far down it goes, I'm out. Right.
Right.
So stop.
That's the thing. Well, just saying the market has this ability, or maybe it's not the market, just it's our own psychology. We're the man in the mirror is the biggest problem in our trading. But just basically, I'm losing my train of thought here, Jonathan. Go ahead.
Well, pretty much you don't want to get caught with the price continuing to go down, and you can't get out because you put in the wrong type of order. So one of the best ways to mitigate against those risks is to make sure you're putting in the right type of order so you get filled at the right price. So that you're not like me. I mean, it was a small trade. I lost like $5. But you know what? No matter how many zeros are behind that number of shares or contracts, it's just basic math. You want to get filled at the right price or stop out when your trading plan says I'm going to stop out. Something else that you mentioned as we were prepping for this was how, depending on the brokerage that you use or the data that you're working with, there can be freezing or scrambling that could leave you kind of dead in the water. That's the term that you used as we were talking earlier. So can you tell us a little bit more about some of the risks of relying on a particular platform and having more than one source of data?
Well, before I get into that, if I can, I would like to say something positive about TradeStation, about those limit orders. The cool thing about TradeStation is when I put in my limit order, if the stock, they'll give me the best available on my limit order, pretty much. I've never seen them. Other platforms, I'm not going to mention names. If I put my limit order outside of the bid ask spread, like accidentally way outside, 25 cents or whatever it is, I don't know how far the limit is that you can go here, but I've gotten filled on those exact mess up orders. TradeStation, if I accidentally put my order to get out 15 cents against me and I didn't mean to, they literally give me the best available still. So that's one of the coolest things about TradeStation. But with retail brokers, I've noticed that there's no perfect broker. There's no perfect software. There's software issues. There's our own personal computer issues, our own personal internet issues. So to say where these issues come from is totally up in the air. But I've experienced it all. I've had my chart to where it's not showing me the actual price of what's going on. The chart will either freeze. It'll become a delayed chart. It seems like I'm all of a sudden, even though I'm paying for real-time data, I'm getting 15-minute delayed data. And then funny thing, a few minutes later, it goes back to what it was. My time in sales has scrambled and froze. It's went to prices where it's not at. Same as the level 2. Or I trade the spread. I'm always watching the spread. I have these big, huge buttons with TradeStation that I love. So I'm watching the spread, and even that, like, sometimes the numbers are not lining up with exactly where it is. So this is where having a second data source like Benzinga Pro comes in handy, because I look over to the left and I got my chart over here with Benzinga Pro that's also telling me, and then I got another computer totally different, disconnected from this entirely, and I got a different broker over there. So I got all these different options to look to make sure that my data is accurate.
Right. So basically, just having those, at least more than one source, whether it's 2 or 3 sources of data for your pricing data. Of course, Benzinga Pro has that real-time pricing on the charts. And then you also mentioned looking how your P&L can sometimes get scrambled. If the brokerage has the wrong pricing data, then of course your P&L is also going to be screwed up because it's not based off of truth.
Yeah, this is another thing. This is not with my current broker, but I've had a situation to where, let's say I was losing $50 and it told me that I was making a couple thousand. I'm freaking out, going, oh my gosh, I gotta sell this. I gotta sell this. I sell it thinking I made all that money because I'm not seeing that on the chart. It's not lining up. But at the same time, I'm thinking that maybe this data is scrambled and frozen, whatever, like I've told you can happen. So I think I have this money because the P&L is usually always right. Even when these other things scramble, the P&L seems to usually be right. So I hit the sell. I look later and I'm like, oh, I lost $50. If I would have held that trade too, I would have made more money than what I was seeing. But because it had scrambled and everything got me really excited, I sold it really quick.
Yeah, those are some good points. Let us know in the chat. I see we got what 100, almost 150 people in here. But be sure to smash that like button and let us know in the chat if you've experienced any data issues like this or anything that you've done to help mitigate against these risks in your trading. There are lots of hidden traps in terms of trading. And so, Andy, you did also mention some of the names that you were trading today and yesterday. AMC has been pretty wild recently, and you were trading some of the indices. So do you want to talk about that?
Well, AMC basically has been a complete monster. Yesterday, it was really reliable. I got in and out, and it paid the bills great for me. But let me pull up AMC real quick. Do I have my screen shared there, Jonathan?
Yeah, I can share your screen now. So it's just a black screen right now.
Oh, let me see that. Sorry, I'm going to try to share it again, see what happens. Still black?
Yeah, it looks like you might have an issue there.
Okay.
I can bring it up on my end if you want.
Thank you, Jonathan. I appreciate that.
All right. So I'll just bring up Benzinga Pro really quick and take a look at AMC. So go into the chart here. See that it's down today, but you want what, like a 15-minute chart to look at the past couple days?
Yeah, basically, like when you first see we started ripping, and I would go to more of the 5-minute.
Okay. Just going back in time there.
Yeah. So, anyways, I think that basically we just had an uptrend the whole entire day. Pulled back, nice flat consolidation, and that was I just basically, instead of holding the position and buying low and giving a big wide stop or something like that, I get in and get my profit. I get back in and get my profit. And what I love about that is a lot of times when I sell, the stock will pull back really fast. So then I'll get a better price. I just locked in all that profit from that move, and now I'm back into the same place that I took profit from, and it continues higher. So I end up doing that quite often, and that's what I did here with AMC.
Yeah, so this is from 2 days ago. And so yeah, obviously you could have gotten in and out multiple times with a long position. And then were you doing anything with this quick spike up at the open yesterday?
Yesterday, actually, I bought the lows on that pullback where it dropped off. I bought that bounce, I believe, twice.
Okay, so that's a great point as well. So even if you're not in on that initial spike up, that's what, 4 minutes there, and then you're saying you bought down here at the lows after it came back down to earth.
Yeah, I'll see that. I'm looking in the most immediate sense for my trading. I'm not looking at. I want to look at the big picture, but for my actual trades, I'm looking at the price action, the way that it reacts in this, to this second, So basically, if I find that we are at a predictable area of support and the price is confirming that, I'll grab it really quick. I'll take that little bit of profit, and I did that several times. I don't think I did them all right there at that point, but the first one was right where you're at right there.
Awesome. And then you also said you were trading the indices. Should I hop over to the Qs or the SPY?
Well, that's one thing that's really interesting, Jonathan, is that when you hear everybody say it, always have a stop, always have a stop. I've never met a successful trader yet that doesn't have a stop. Well, there's a lot of times that, first of all, I don't put a hard stop in. Every time I put a hard stop in, the price starts going right towards it, like you're putting out dog food, and
right.
You're like, here, come here, boy. And So I don't put in a hard stop to protect myself. I use a mental stop. I've established my risk in much different ways. Like one of those ways would be I'm not putting, let's say, a $30,000 trade on, and I'm trying to make a few hundred or a few $1,000s. And I've said, okay, if this chart moves down 15 to 25 cents, then that's my stop point. That's my max risk, because I know that a lot of things can go wrong and it can blast right through that. So I'm going to choose my position sizes much different. I'm going to make sure that I have a smaller position size. And there's no way, even in the nuclear option, what I call it, that I'm going to end up losing more money than what I initially decided that I was going to lose, based on my position sizes, based on where I said I was going to stop out, and how I manage that trade in between my first entry and my final exit.
Let's talk about that a little bit more. So, you're talking about how you can be rock solid sure that you're not going to get burned on this, even if it goes past a stop. So, can you just elaborate on that a little bit more in terms of how exactly you set that up?
The first part, 100%, is not being greedy and being willing. In my case, I'm going to put, like, let's say 10, 20 plus trades on per day, and I'm going to let that add up to my target. So I'm not looking to make all my profit in one trade. So I'm, just a little bit here, here, here. And then if I have a win rate of 70%, 90%, whatever it might be, I'm only losing 3 out of 10, 1 out of 10, so those are going to work out for me. And then so basically position sizes, not being greedy, not trying to get a huge amount of money from each trade, just willing to take little bits and let that add up. There's stores out here that sell packs of gum like 25 cents. At least they used to. I don't know what they are anymore. I don't buy gum.
But like $2 now.
Right? $2 now. But basically they're making good money off of doing that. So if they can do it, we can do it here in the market, especially in a world with $0 commissions. There's no excuse for putting in huge position sizes that we used to put in, because we had to make up for that missing profit. Right off the bat, you knew that it was going to be at least 5 in to 8 in and 5 to 8 out. So, right off the bat, you have to already account for that in your profit target and everything.
Right. And then before, you were also mentioning of how you could be long one position and short another position at the same time, like right at the open, so that if it goes up, you're up, and if it goes down, you've got your hedge. So, what are some of your favorite ways to set that up?
Well, basically, one of the keys here is everybody's afraid to. First of all, a lot of people are afraid of shorting in general. They don't even want to mess with shorting because of all the things that can go wrong. They heard that, I could, if a stock blasts up 4,300%, that's the multiples of how much I'm going to lose until I get a margin call. And now my account that was, like, say, $1,000 is now like, 150,000 in the hole, or whatever they say has happened to people. That's by your choice of trade. If you're going to short some garbage penny stock that is like totally in beast mode action, and you're going to hold on to that loss, yeah, you're going to get destroyed. So I'd recommend really doing some research before messing around with that. But what I'm talking about is, like, when the market pulls back, everybody's afraid to buy that pullback. There's no need to be afraid. If we put on that position, start small, and then we could simultaneously put on our hedge. So best case scenario, the core position starts working its way back up towards the highs. I'm losing dollar for dollar, so I'm losing profit. Now I got to figure out if I want to cut my hedge because we're working into the general direction that I want it to be, or even better case scenario, it doesn't work into profit immediately. It starts going against me. Now I'm profiting off my hedge. I still have the thesis that this stock's going up and it's going to continue to go up. It's the SPY, right? What does the SPY do? Stocks only go up. Anyways, so I'm going to go ahead and I'm going to close out my short, my hedge as it goes down, and then I'm going to profit on that. And every penny that it works its way back to my average where I initially got into the core position, that's profit in my pocket. And not to mention, if I put on that position and I already have a net profit locked in, so sometimes you'll get into your main position, you'll buy, it'll go up, you have a slight amount of profit. In that profit, you can put your hedge on, or you can see them diverge. I'm probably going way too fast into this, but you can see them diverge to where one will push against you this way, one will push against you this way. And by doing that, If I add into both right there, I just made it to where when they finally do come back together, I have a net profit. And they do, they balance over time. So
Kind of like an arbitrage
right,
situation. So,
exactly.
and then, so basically, you're looking at two different setups there. I think before you were mentioning the what was it, the TQs and the SQs?
Well, if you're only in an account where you can't short, TQs and the SQs are an option.
Hmm.
For me, I would definitely probably go with the SPY and the Qs, or you can work in options in this, you can work futures in this. I mean, you could have 6 players in one game, all working towards the same goal. And the coolest thing about trading, it's like chess, and the strategies that you can come up with to accomplish what we're talking about right here. I can't even think of them all. We together couldn't even think of them all, and somebody out here might be able to in a way that we can't. So that's the amazing part. But going back to stops, a lot of people say put in your hard stop. We're dropping off, and I got to just stop out. When I do that, I'm no longer in the pool, Jonathan. I'm no longer swimming. I'm out of the game basically. Now I have to reestablish another position. So what I'll do in that case is, instead of stopping out, that's where I'll throw on my dollar for dollar hedge. So if I was going to say I'm going to lose $50, that's the most I want to lose. That's where I slap on my hedge. Now, as it's moving, I've only locked in a net loss, negative $50. I'm down $50. That's it. And in some cases, like I said, if you get that divergence or convergence, whatever it may be, you can work your way into either a greater loss or, greater profit. And if you're working in these positions as they're moving and you know what you're doing, you can work your way into a nice net profit and lock that in.
Awesome. So let's see. I'm looking at the chat here. Someone's saying Nvidia going down as we speak, short from 281. Awesome. So let's take a look at that here. Nvidia. Let's see. I've got this on the 1 minute chart. Let's change this over to 5 minutes. Oh, I'm not even on the right day. Yeah, short from two. Nice. Short from 281. So yeah, there's definitely money to be made on the long side and the downside, as long as you're mitigating that risk with your position sizing, like Andy was talking about, and then and the discipline of when you're going to get in or get out or hedge, right? So basically, we're talking about a third way here, is by applying that hedge. You don't have to necessarily exit, as long as in at least in the way we were talking about, have a one-to-one hedge there, where even if it's going down, you make a little money on one side and then you'll be losing money on the other side, but it's net zero.
Yeah, I mean, the worst case scenario is, as long as it doesn't diverge, is that, I'm dollar for dollar, so I'm not making any dollars, I'm not losing any dollars. I got to be in and play the game without losing, basically, is the result. But if it pulls against me, then I get to lock in the profit from that exhaustion, with the ease of putting that position back on if I need to. And then from that point on, like I said, anytime that it works into my plan, my overall plan, that it is still going up, that's just going to bring me back. First of all, I'm going to lock in all that profit from the hedge. I get back to even on that, and I've locked all that in. Now I'm profiting on my other one. I'll tell you, Jonathan, over 80% of the time, I'm profiting on both sides. I'm profiting in my hedge. I'm profiting in my core position.
Awesome. That is a great strategy there, because we can get so focused with tunnel vision on just one way of making money, and actually, as you're getting more comfortable with this, you can make money on multiple areas of a trade. I'm seeing awesome, good job, Easy Mike. MULN CEO was on earlier, made 60 cents a share. Fantastic. Let's see here. Planning to recover some around 272 on Nvidia and rest 262. So as we zoom out here a little bit, you can see more of what's going on with Nvidia here. And yeah, I can see why 272 would be important there. Go ahead, Andy.
Oh, sorry. Go ahead, Jonathan. I'm good.
I was actually just going to ask you what else we want to share within the next 5 minutes here. We have some more time. Um, we could take a look at
Well,
MULN.
if you don't mind, I would like to put in here also that um, when I'm looking at a stock, the first thing I want to know is there options and are they liquid? Is the
Mm,
spread tight enough to where I can see them fluidly moving? If I just see that a stock has options, there's a 25-cent spread and they're not moving at all, they're not ticking around, it's just sitting there. I probably don't really want to mess with that. The other thing is there shorts available? Can I short this thing? Everybody's scared of the big bad short, and they think that the shorting people are taking away their money or whatever. I think it's the exact opposite. The market reacts to shorts positions the same way it reacts to long positions. It pushes against them.
mm.
So my theory, my idea here is that shorts are actually good for longs, because I can't tell you how many times I've been short and it's slammed against my position, basically squeezing me, and it's giving all the longs profit. So maybe if I wasn't there at that particular time, the market is reacting to orders. That's what we're seeing. Every single thing we're seeing is it's either setting up or it's reacting, or people are consuming because they need it, or they're unloading.
That makes sense. And check out this this reaction to our exclusive interview here. This is just a really good example of the value of Benzinga's news team. We had an interview earlier today with the Mullen Automotive CEO. They're on Benzinga's EV List Maker conference, and then you can see the reaction here as that volume came in, and you had this move from 220 up above $3 to even above 310 here, off of that conference presentation. So about 1 o'clock here, you can see that that they were presenting, and then the move came in, you know, obviously for the rest of the day there. So definitely pay attention to those exclusive news items. I threw the link there into the chat, so anyone who doesn't have a free trial, go ahead and get that started. Let me know if you have any questions at jonathan@benzinga.com. Throwing that link there into the chat. Yeah, that news definitely does move stocks, Mike. So this is a really nice example there.
Well, that's the best thing. You guys have the squawk. You're reading the news out, or you got the audible alerts letting me know what's halting or whatever. It's Benzinga Pro is priceless. It's the one thing that I have to have on a chart at all times. I wake up sometimes curing Charlie from the computer being on. He starts talking really. I don't know how he does it. It seems like he's up at least at 4 a.m. and he doesn't seem to go to bed. I don't know. Does he even sleep?
Yeah, he is. He is actually up at 4 a.m. every morning. He'll throw some headlines on the Benzinga Pro news feed around 3:45 or 4 a.m. and then he'll start squawking around 6. So the guy works very hard and adds a lot of value for our community. Easy Mike says Charlie is a robot. I would think that if I hadn't met him. um, James says, hell of a voice to wake up to. That's funny.
He's got the perfect voice for this. He really does.
Yeah. All right, everyone. Take care and be sure to tune in tomorrow. Andy, thank you for being here and helping us to think about how to mitigate these risks, how to avoid these hidden traps of trading. And so, just to recap some of the things that we discussed today, use use limit orders and not market orders when you're getting in long. And then on the stops, we're talking about the difference between a normal stop limit versus stop market. If you're gonna actually get out of the trade, then you want to out no matter what, right? And correct me if I'm saying anything incorrectly about what you said, Andy. And then finally, you don't even have to always exit the trade. There is that other way where you can put on a hedge, and that way you're making as much money with the hedge as you'd be losing with your core position, and then you can get out of your hedge and just have a better entry point and make money on your way up. So hopefully, you guys are all continuing to learn from this show. Let us know if there's anything else we can do to add value for your trading. start that free Benzinga Pro trial, and we will see you soon. Thanks again, Andy.
See you later. Thanks, Jonathan.
Take care.